Good afternoon, everyone, and you're all very welcome to Thursday's US session open. I'm recapping, I suppose, on the data today. I suppose the jobs claim data, looking at the markets in a broader consensus, and then setting a course of action for today's 2:30 US open. Of course, we do have ISMs coming out at 3 o'clock, and we do have NFP tomorrow, which I know a lot of market participants are watching very, very closely indeed. So I suppose just to kind of run through today for the session open more broadly, taking a quick look at the data that came out of 1:30, we're seeing that the initial jobless claims has come out. And of course, I suppose the two big takeaway factors is that productivity is down and labor costs continue to remain very much tilted to the upside. So that's very much been factored into the price action initially at 1:30. And of course, seeing the markets over the last 3 or 4 days or so continue to decline into yesterday's month end and setting a course of a slightly more dovish and slightly more weaker market movements this morning, particularly in the London session as we gear ahead now today into the US session for September. So again, a couple of other bits and pieces that we kind of want to look at is, I suppose, we talked about it in our macro update this morning, that's much stronger euro, euro getting a very, very strong headwind in the sense of market participants again pricing in a 75 basis point increase in interest rates in September. So we've seen euro pairs, broadly speaking, do very, very well. We're seeing euro dollar, that real battle is continuing to play out at parity. And we can see that there very, very vividly over the last number of days or so, and particularly over the last week and a half or so, that the euro dollars continue to really battle at that parity level off the fact of this much more hawkish outlook by the European Central Bank. I suppose two other headwinds that I kind of want to talk about as well is the Nord Stream issue, and I suppose the continued deadlock that we're seeing there. And I suppose German commentary this morning shows that they can't rely on the broader consensus here by the Russian institutions, and of course the likes of Gazprom as well. So we're seeing that factor into the price action as well. And of course the second thing as well is the real rates going vertical and superseding the break-evens, which has meant that the inflation narrative is becoming extremely more I suppose mispriced, and we've talked about that in our discussion group for many weeks now. I suppose obviously the Fed got it wrong initially, but now it's a case of, are they overstepping and overshooting? And I suppose that's what we're looking at very, very closely now into the 21st of September as we get the next Fed funds rate meeting. So we're all eyes is really going to set a course of action for the 21st of September. Now, broadly speaking, again, with that, we're seeing the oil markets with the break-evens being superseded. We're seeing those oil markets pare back a lot of those gains, as we've talked about over the last number of weeks, and particularly this week or so, in the last 2 or 3 days, we're seeing those oil prices move from a period of 97, 98 on the dollar against WTI to back into these 87, 88. So we are seeing a fairly significant decline this week in the oil markets, and we do have to be kind of cognitive of that effect as well. Meanwhile, as well, in our commodity markets, the gold prices are continuing to slide off the back of that rising 10-year yield, rising 2-year yield, both of them superseding and breaking up above that 3.2% level. And of course, in the backdrop as well, we can see how the DXY is remaining very much tilted to the upside and very firm above that 109 level. So that, of course, is going to put pressure on the commodity markets, on some of these more riskier asset classes, like the indices, like the stock markets, which we're going to be talking about now in a second. And that, of course, brings my attention to the S&Ps. It brings my attention to the NASDAQ, to the Dow Jones, which this week have all seen that continued slide lower into month end from last Friday's Jackson Hole. And of course, that continued slide this week, Tuesday, Wednesday in particular, into today's kind of short-term consolidation here that we're kind of seeing into the US Open today. So broadly speaking, US markets very much down. We talked today again in our market updates the indices getting hit quite heavily in the last 2 weeks or so, since that kind of 16th, 17th of August market top. We've seen the indices very much U-turn and very much grind lower quite aggressively day by day. So that obviously, as I said, brings our attention to the US session today, to the S&Ps, to the NASDAQ, to the Dow Jones. Now, we will be looking at our market profiles now in a minute. But broadly speaking, yesterday we had that continue to slide from 4,000, which we talked about in the macro updates this morning. We've seen that kind of 75, 80 point slide through yesterday evening into today's consolidation into the 230 open. And of course, we're seeing that across the board as well. NASDAQ sliding, the Dow Jones continue to slide. Now, this is only a 1 hour chart in the Dow Jones, but if you go up to the higher time frame viewpoint, you can see that since those 16th, 17th of August highs, the Dow Jones is down a modest 3,000 points or so. So we just have to be kind of cognitive of that. And even again, back home in the European markets, the DAX continue to slide in the last couple of days or so in this week, again, of these pressures regarding natural gas. And of course, I suppose the associated issues with everything that's going on in European markets at the moment. And the FTSE is, again, not performing as we'd like to see. Of course, today, month end, we would traditionally look for a bit of buying on month end with pension funds, but that's really not coming through. We're seeing the FTSE continue to slide lower. It'll be its 5th consecutive day of selling. And of course, markets are edging lower back into that 7,000 level as well on the FTSE. So today, as we look at the US session open, shorter time frame parameters, we're seeing that the S&Ps is very much conducive around this 39.20, 39.25 level of interest. And we had an initial impulse this morning, again, between kind of 12 and 1 o'clock, but that is very, very quickly faded. And we were back into this previous consolidation that's been developing through the Asian session markets last night, and of course into this London Open this morning. So markets very, very condensed this morning, broadly speaking. If we look at the S&Ps, we're seeing it there visibly on the 15s and 30s. We're also seeing that similar scenario on the NASDAQ as well, a temporary bottom coming in here around about 12.1. And of course, it's very, very similar scenario on the Dow Jones as well, which is holding this short-term bottom here around 31,300. Now, of course, we do have ISMs at 3 o'clock. So again, previewing that and forecasting that, realistically, a lot of market participants will be eyeing the 3 o'clock data print to kind of get a more formalized viewpoint on the price action. Because of course, if these data prints turn out to be negative, then we could well and truly see this slide continue, seeing these lows being taken out, and for the price action to continue descending lower. Now, at this moment in time, I'm still running some shorts on the S&Ps over the last few days or so. I continue to kind of look for that bearish price action myself personally. But again, I suppose every kind of short-term rally or dip is being met with equal, if not even more ferociousness in terms of selling. So it's just being kind of conscious of that as well. So into today's markets, very much watching the ISMs at 3 o'clock today. And of course, we'll be on hand tomorrow for the NFP data print. So of course, setting a kind of tone of action for the end of the week to kind of determine a clearer bias. And of course, setting out August month end, which is proven to be very, very bearish. And I suppose a general directional bias for, of course, September in the first couple of days or so. So again, when we bring in our market profiles for the S&Ps from a kind of day trading perspective, we're seeing this bell-shaped curve here in the S&Ps. We're seeing very much price consolidation and congestion between 39.20 and 39.40 after that kind of initial impulse today. So from my perspective, it would be very, very clear to see, does the price action hold up here between 39.20, 39.30 and make a short-term rally just to kind of alleviate some of those selling pressures that we saw yesterday into month end? Or are we going to see kind of a more streamlined, fairly straight line selling opportunity through 3,900 and back into these mid-July lows that we're kind of looking at on the higher time frames way down here in the kind of 3750, 3800 level. So that's kind of what I'm looking at there primarily on the S&Ps. Of course, if we do start to see an upside swing and a bit of profit taking or relief rally, then the shorter term 1 hour areas of interest up here between 3980, 4000 will probably be a short term upside target. But of course, that can very, very quickly be alleviated. So just patience, discipline, Keeping an eye on the data today, I think, is going to be important, because I think that's going to be the participant. And we know from Thursdays, we can very, very easily rally 300 points, or we can very, very easily decline 300 points. So it's very much a case of watching the battle between the buyers and sellers at 230 as we enter into this market. Now, as we know, we are seeing a little bit of buying coming in here initially on the open, which is showing that this area between 39.20, 39.30 is holding firm at the minute. And of course, on the NASDAQ, 12.1, 12.150 area of interest is also holding quite nicely. Now, of course, when we move across to the NASDAQ, just to look at the market profiles there as well, we are seeing very, very clear, again, similar bell-shaped curve move in this area here between 12.1, 12.150. So we've got our market profiles, point of control 12.150, pretty much on the nose. And we had that extension up around half 12, which was that short-term move in the indices, which very much came back into that congestion zone. So from my perspective, 12.150 to 12.200 is going to be the anchor point. Okay, if the price action is breaking back above that 200 level, well, then it's going to give a little bit of optimism. Now, at this moment in time, NASDAQ is kind of grinding lower on the open initially. That initial impulse, which we talked about just a few minutes ago, looks to be fairly choppy, fairly volatile. It didn't look to last too long. So now it's just a case of setting out a tone to see, does these lows give way? And if so, we're going to get a clearer bias then for the afternoon, because it does look then like the sellers will be in control through the course of the session. Now, of course, as I said, ISMs at 3 o'clock are going to be important, because that's probably going to be the catalyst to determine, are we going to get a more elongated sell-off, or are we going to get more consolidation with a short-term relief rally? At this moment in time, let's just wait and see. But of course, it's important to look at the price action from both perspectives. So as market participants and as day traders, that we're prepared for both scenarios. And of course, then last but not least, as we finish off today's Zoom, is the USA 30 Dow Jones Industrial Average. And of course, we're seeing that very much a congestion between 31.3, 31.400, point of control 31.418. And as we look at that, broadly speaking, now we are under the point of controls. We are just about holding on to these lows. And of course, if these lows give way, where are we looking at upside targets? Well, dialing up to the higher time frames, we have got a level here. There's not really much separating the price action here between 31,000. I think if 31,000 gives way, you could very easily see that slide back into those mid-July lows around 30,500. And again, the same thing would also be said for the NASDAQ. Okay, the NASDAQ, if it's breaking that short-term low today, we can kind of see it there around 12.1. Well, then that's going to bring in a lot more bearish price action between this 11.5 and level 800 levels down here. So this area of interest would become increasingly more enticing for those bearish positional holders. And of course, just setting out that tone today just to see, does these lows get breached? And then we have a clearer consensus then through the afternoon and into NFP tomorrow as well. So that's pretty much it for today, guys. We are seeing sell-offs in the oil markets and the commodity markets, the gold markets. We are seeing the yields grind higher. We're seeing the euro dollar battle at parity. We are seeing the indices very, very choppy here, making this kind of short-term bottom, and very much watching the ISMs at 3 o'clock to see, does these bottoms hold up, or are we allowing ourselves for a deeper runoff? We've seen fairly significant sell-off since last Friday, but more broadly since that 17th of August level. And it's just a case of setting out a clear understanding and bias into the weekend, starting off the first couple of days of September, and then navigating through what's going to be a very, very choppy couple of weeks. Next week, we do have the beige book. We do have CPI figures coming out on, I think it's the 13th of September. So there's plenty of more data points, which we're going to be watching very, very closely into the next Fed meeting as well. All right. So that pretty much wraps us up for today, guys. We will be in the discussion group. Of course, if you are watching along and you're new, feel free to join us in our discussion group. We talk about a lot of different market moving events on a daily basis. And of course, we will be on hand through the afternoon, digesting the ISMs, and of course, watching and commenting on the price action through the course of the afternoon as well. All right. Have a great day, everyone.